Uma, I'll start with you and the broader markets, if that's okay. I mean, are you worried? We were talking about this just moments ago, Becky and I, that we are up 5% in this month of December for the S&P 500 after what has already been such a strong year. Does that just set the bar very high in January for further gains?
Good morning, Wolf. Great to be here. And as you guys were talking about earlier, what has happened this year has really been a story of fantastic recovery, fantastic growth, a lot of liquidity. And so in that context, what the market has done this year actually makes a lot of sense. And as we look into next year, kind of those building blocks that we're looking at in the broader economy as it relates to the consumer, the strength of the consumer, the fact that we're kind of getting COVID under control. And by that, I mean, we're getting used to living with it, right? And so as we kind of move forward into what this new world is going to be like, that's what the market is really looking at this point and looking forward into 22.
And in terms of the biggest risks out there, do you think, Uma, that valuation multiples are more likely to be pressured over the course of next year than to grow?
Absolutely. As we've gone through this year, a lot of that easy money through the multiple expansion process has kind of been made. As we look into next year, the question is really about earnings growth and the quality of that earnings growth. We're going to have some choppy waters as it relates to the fact that we've seen that yield curve really flatten, which kind of brings in the conversation about what growth really looks like in the broader market. And so you're really looking for those strong earnings growth types of stories as we think through what next year could be. And really, I'm expecting choppy waters as we look into the next year. And so our job here at CenterSquare as active managers really looking for those winners in that sort of an environment.
Dan, with that in mind, we're discussing this a bit yesterday with Mike Santoli. What multiple do you have Microsoft on at the moment? And of those mega cap names, do you think it's vulnerable to multiple compression next year?
Yeah, I mean, look, I think overall in tech, you're going to see some multiple compression. But let's say Microsoft's a good example. I don't view that as just a straight PE multiple. I think as sum of the parts, in terms of what the cloud business is worth, we think ultimately the cloud business is worth over $1 trillion, when you look at Microsoft. And I think that's the way you have to view it. It's the way we view Apple in a sum of the parts in terms of services, as well as everything happening on the hardware business. So I do think you'll see some multiple compression, but I believe we're in a fourth industrial revolution. You're going to continue to see numbers significantly go higher. I think Street's underestimating growth by 12 to 15%, which is why we think a year from now, we're sitting here at NASDAQ 19,000.